We use cards every day, swiping, tapping, inserting. But how often do we stop to think about what's really happening when we use a debit card versus a credit card? They look alike, feel alike, and often live in the same wallet, but underneath the surface they behave in fundamentally different ways. One pulls money you already have. The other lets you borrow money you haven't earned yet. That difference influences not just how you pay, but how you budget, build credit, protect yourself from fraud, and manage financial emergencies. In this video, we're going to go beyond the surface-level explanations and dig into what makes these cards different in everyday life. We'll talk about how transactions work, how they affect your bank balance and credit score, what protections each offers, the costs you might encounter, and how to choose between them depending on your goals. Let's dive in right here on History of Simple Things. A debit card is directly linked to your checking or savings account. So when you make a purchase, the money is withdrawn almost immediately from funds you already have. It's like writing a digital check. The bank verifies the transaction, then reduces your available balance. A credit card, on the other hand, is a line of credit provided by a bank or financial institution. When you use a credit card, you're essentially borrowing money up to an approved limit. The card issuer pays the merchant on your behalf, and you later repay the issuer, either in full or over time with interest. Mechanically, debit transactions involve your own funds being accessed, whereas credit transactions involve an agreement to repay borrowed funds. This single distinction has ripple effects across many aspects of financial life, including how payments are recorded, how disputes are handled, and how your financial behavior is assessed by lenders. It's the difference between spending what you have now and committing to pay later, and understanding this is key to using each card responsibly. One of the most immediate and visible differences between debit and credit cards shows up in your bank balance and cash flow. When you use a debit card, the money leaves your account right away. This can help you stay grounded in your current financial reality. If the cash isn't there, the transaction often won't go through, or it may trigger overdraft fees. For many people, this direct linkage to available funds helps enforce discipline, because you can't spend money you don't have. A credit card, in contrast, doesn't affect your checking account at the moment of purchase. Instead, it increases the amount you owe to the card issuer. You receive a monthly statement showing the total purchases, and you must pay at least the minimum payment by the due date. If you choose to pay less than the full balance, interest accrues on the remaining amount. This delayed payment structure can be powerful, enabling flexibility and short-term liquidity, but it also introduces the risk of debt accumulation and interest charges. For cash flow management, debit cards are often more transparent, while credit cards require planning and self-control. An important difference that many people overlook is how debit and credit card use affects your credit score. Your credit score is a numerical summary of your credit history that lenders use to evaluate your financial reliability. Debit card use doesn't typically appear on your credit report because you are spending your own money. Banks have no credit risk to assess. This means debit card activity neither builds nor harms your credit history. A credit card, however, is a form of revolving credit, and responsible use of a credit card can help build a strong credit history. Making on-time payments, keeping balances low relative to your credit limit, and using the card regularly can contribute positively to your credit utilization ratio and payment history, two major components of your credit score. On the flip side, missing payments, carrying high balances, or defaulting can significantly damage your credit, making future loans more expensive or harder to obtain. Therefore, while debit cards don't move the needle on credit, credit cards can be powerful tools for establishing and improving financial credibility when managed correctly. Another key difference is the protection they offer when fraud happens. Credit cards usually limit liability for unauthorized charges and often include dispute and purchase protections, while debit cards also have protections but depend more on how quickly you report the issue. The biggest practical difference is that debit card fraud can temporarily remove money from your bank account during investigations, while credit card disputes usually don't affect your own funds right away, making credit cards generally safer for risky or online purchases. Debit and credit cards differ in both costs and when they're most useful. Debit cards usually don't charge interest since you're spending your own money, though fees like overdrafts or ATM charges can still occur. They're often best for everyday purchases because they keep spending tied to your available balance and make it easier to stay within a budget. Credit cards can come with interest and certain fees, but they also offer rewards, stronger purchase protections, and the ability to build credit. This makes them useful for larger purchases, travel, or situations where short-term flexibility helps, as long as the balance is paid on time. Used wisely, both cards can play different but complementary roles in managing your finances. So what's the real difference between a debit card and a credit card? A debit card lets you spend your own money, while a credit card lets you borrow and repay later, with a chance to build credit but also the risk of interest and fees. Both make cashless payments easy, but they affect your balance, credit score, and financial security in different ways. Understanding how each works helps you choose the right tool and avoid unnecessary costs. Thank you for watching. If you have suggestions for our next video, feel free to share them in the comments below. We'll be sure to give you an acknowledgement for your contribution. Thank you for joining us on this journey through the history of simple things. Don't forget to like, subscribe, and stay tuned for more stories woven through the smallest details.